Hello everyone, this is Alejandro Cremades, and today we're going to be talking about venture capital versus private equity. So raising capital has now become even more popular. So essentially now there's all types of articles out there. This company is raising this, that company is raising that, from all types of sources. But essentially it's very important to understand who for your specific stage, for your specific location and perhaps segment is going to be better suited to invest in your business. So in today's video, we're gonna really dive into venture capital firms and breaking them down, as well as private equity firms, so that you can really understand how each of those really differentiate from one another. So with that being said, let's get into it. So the first one is private equity firms. Private equity firms, at the end of the day, they're going to be those firms that are essentially not investing in people, like let's say venture capital firms would do. They actually invest in numbers. So for this reason, they tend to invest a little bit later in the life cycle of a startup, perhaps financing cycle, and that tends to be around a Series B, which tends to be the third round of financing that a startup company is going to be doing. At this point, what they're essentially going to be looking at is that there is revenues of at least 5 million and up, and they typically come in order to do an expansion or growth rounds of that startup that they're taking a look at. Now, there's also many different flavors in which the private equity firm is going to be coming in terms of intentions. So that could be either just an investment, perhaps buying a controlling interest in the business that they're targeting, or even acquiring the entire business itself. So those are the three different things that you're going to be seeing from those private equity firms that are going to be coming into the picture. Now, in terms of some of the top names in the private equity industry, the following are worth mentioning. The Carlyle Group, Blackstone, KKR, TPG, Bain Capital, Goldman Sachs, Accel, Berkshire Partners, or Cerberus. So again, the main difference really is that private equity firms are going to be more of your end game as an entrepreneur rather than your earlier game, which is what you're going to be seeing on venture capital firms. Again, always be pushing for the next financing cycle, and perhaps once you start to hit those revenues, then private equity firms may be your next institution that you want to target. But don't waste your time early on with private equity firms. At least it's not bad to just develop the relationship, but make sure that you have the expectations clear, and that is that they're not going to be coming in if you are anywhere under 5 million in revenue on a yearly basis. Now, venture capital firms is all about investing in people. They are really investing at the early stages of a company. Now, obviously, you have the early stage venture capital firms and the growth stage venture capital firms. But essentially, they always invest in people as a common theme. They've developed what they call the pattern recognition to understand which founding team or which team has the most amount of potential to execute. And typically, you're going to be seeing venture capital firms investing when the company is doing over $1 million in revenue. But before that, you're going to be seeing what they call the micro venture capital firms. Now, essentially, venture capital firms, they're going to be investing for the first time at the Series A round of financing. And then you would see them investing on the different rounds, Series B, Series C, Series D, all the way until the company does an initial public offering when they become publicly listed as a company. Now, typically, venture capital firms, essentially, you're going to have their partners, associates, analysts, and different type of personas that are going to be pushing from really originating the deal to actually doing the due diligence and closing the deal. Venture capital firms, they are very easy in the form of how that due diligence works. Probably on private equity, they're going to be even more intense when it comes to the historical data, because on venture capital firms, they're really banking on you and they're banking on helping you with building the business. So they're really looking at the future rather than thinking so much about what has happened in the past, even though it's important. Now, typically the way that it works is that you arrive to the partners meeting on a Monday or a Tuesday and you pitch in front of all the partners, and that essentially leads with the term sheet, which then is going to be due diligence and then the closing. But really, venture capital firms, they're going to be investing anywhere between $250,000 all the way up. And while, for example, you'll see on private equity firms that they're investing much bigger amounts, like millions, and it could be hundreds of millions. Typically, venture capital firms, they're a little bit lower on the amounts that they are investing as well. Now, in terms of some of the top venture capital firms that is interesting also to mention, those are the following: Sequoia, Accel, Bessemer Venture Partners, Andreessen Horowitz, New Enterprise Associates, also known as NEA, Insight Venture Partners, Index Ventures, and Khosla Ventures. Now, one thing that private equities and then also venture capital firms share is the fact that they are essentially investing money from funds that they have raised from limited partners. The limited partners are those investors that are investing in their funds, like endowments, pension funds, anything that essentially, like have access to larger pools, maybe like even insurance companies, whatever that is, but essentially they're getting their money from other parties. And that means that that money, they're gonna be deploying it, overseeing it, and hoping for an exit or for a return for their limited partners in a short period of time. Typically, this varies between 5 to 7 year horizon. So hopefully you like this video. Let me know what you're up to on the comment section. And again, please like the video and then subscribe to the channel so that you don't miss on all the videos that we're rolling out every week. And take a look at the fundraising training, which is the program where we help entrepreneurs from A to Z with anything related to fundraising. There you'll find live Q&A sessions, templates, agreements, a community of founders helping each other all over the world. And I think that you'll find tremendous value in it. So thank you so much for watching.